Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the small business community. So I've been getting a lot of questions about the home office deduction, as whether or not employees who have been forced to work from home, and you know what? We got these bills going up, these electricity bills and all that other stuff that's going up at home because we're working from home and all of that. And that is more of an expense to us. So the question has come up several times, and rightly so, if employees will be able to take the home office deduction on their tax returns. On the federal return, that answer is an unequivocal no. Okay, there is no longer the deduction for unreimbursed employee expenses, also known as a Form 2106. There are specific reasons on the federal return for the Form 2106. Now, your state may be a different story. Because, going back to when we had the Tax Cuts and Jobs Act of 2017, that removed pretty much all of the itemized deductions, which included that unreimbursed employee expenses on the federal return. But not all states conform to the federal law. So while something might not be tax deductible on the federal return, it still may be tax deductible on your state return. But that's not all state returns. There are plenty of states that said, hey, whatever the feds do, that's what we're going to do. There are some states that go, nah, we're going to keep these deductions or whatever. So you have to make sure that you check with your state to see if those expenses are still allowed. Now, if your employer has reimbursed you for those expenses, then you cannot take the deduction. So if your employer is giving you some kind of a stipend or additional pay to cover those expenses, then they can't, pay you for the expenses and then you deduct them as well. That's double dipping, okay? Unless of course your state says you can. Just for the record. But that's the short answer, you guys. I know it's for a lot of people, that's a tough pill to swallow. And, there are some industries, because of the removal of unreimbursed employee expenses, that being removed, it hit those industries pretty hard. But there was nothing in the last part of the coronavirus bill, the second one, that said anything about allowing the deduction on the federal return. So federal is a no, state is a maybe, depending on where you are. Have your tax professional, go through to make sure that if you can take the deduction, that you get it. And so I will say this, that everybody's going to really need to put their patience hats on because tax professionals are going to need additional time to make sure that you're getting all of the credits and deductions and such that you are entitled to. Because the last thing you want to do is have to amend the return. So take the time to get it done right the first time. And this is also why I'm saying to not wait until February 12th to start getting your taxes filed, simply because tax pros are going to need that time to go through all these laws to make sure that you're getting all that you can get so you can pay the lowest amount that you are legally required to pay. Okay, so just saying, put your patience hat on, go ahead and get your stuff into your tax professional so that they have time to do their homework and service you properly. Okay, so that is it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.